Hi, my name is Akul Gupta. Through this podcast series, I'd like to learn more about careers and academic choices and relationship between the two. To do this, I'll be interviewing leaders around the world who have excelled in their chosen field. At the moment, I am interested in learning more about finance and business. Hi, my name is Akul Gupta. This is my sixth video. Today, I have with me Anubhuthi Bardwaj. He is a transaction manager at Citibank. Hi, Anubhuthi.
Hello, how are you?
I'm great. How are you?
Nice to meet you.
Could you give us a short introduction of yourself? Uh, Tell us where you went to study and how your career developed.
Okay. So, wow, it's been many years since I graduated from college, but I come from a small town in India, up north India called Solan near Shimla. Maybe people know more about Shimla, but not my small town. But then I went to school there, just a normal upbringing, in the school, you do your 10th, 12th, and then I ended up going to an engineering college in Chandigarh called Punjab Engineering College. Did my electronics and electrical communication there for 4 years, and uh, after that, um, I ended up working with a telecom company called Siemens.
Hmm.
Yeah, and that was in India itself. I was there for like 4 years. Um, I think so. Somehow at that time, I realized like, okay, maybe engineering is not what I wanted to do. And then what do I want to do? I still was like trying to figure out what next. And I think so. I felt like maybe I need to move out of the country to explore new opportunities in this world. So I think so. I went, thought about it because I was also getting an opportunity to move to Germany for some months through my firm. But at that time also I was preparing for my master's, giving my exams for my master's in the US. And I got through a university called Drexel in Philadelphia. And thankfully, I had one of my old classmates who had already graduated from that university. So I had a good understanding of what that university has to offer. Um, and I weighed the opportunities between going to the US, studying there, versus maybe a stint in Germany with Siemens. So I think so. I took the former and then I packed my bags and moved to the US. I think so. That was a very crucial and important decision that I made. And I think so of what I am today is to some extent what of that decision that I made to go to the US and study there. I didn't expect like I would end up living there, but I just wanted to go there so that I could expand my horizons, to learn something new, meet new people. And I think so that's a very important aspect, especially when you're young, to understand, to get a more holistic and a wide angle lens or perspective of your life, both professional and personal. So I did my graduation in 1999 to 2000, probably like one or two. I worked for a couple of months as internship in Philadelphia with a utility company. But then I had to come back to college to finish my master's. Unfortunately, 9/11 happened,
Yeah.
and that was the time when I graduated. Thankfully, during those days, you could have what you call an optional practical training where you could work for an extra year. So I moved to Boston from Philadelphia because I had a few of my college mates there. Thankfully, I got a bit of support from them. So I stayed with them and I found a job with a financial company called New England Financial. It was an insurance company under the umbrella of MetLife. Might have heard of that name. A big insurance company in the US. So I worked there for a year. Unfortunately, during that time, everything kind of stopped in terms of providing work permits for people, for students like me. So I tried my best, but I just gave whatever I could. I learned the basics of insurance, how this thing works, um, as much as I could. But then at the end, I had to pack my bags and come back to India. It was a really bad phase of my life, I would say, because I had gone there with some with a different mindset that I'm going to open up my mind, learn different things, and probably see what I can do some um, a professional uplift for myself. But it didn't happen that way. But now, if I look back in hindsight, I think so that part was a kind of a blessing in disguise, because when I came back to India, I had that finance experience from the US, and I had my master's in decision sciences, which is a mixture of statistics and finance. So that gave me a perspective of, okay, now I need to change and think of what do I do differently. Um, and then I think so there was this outsourcing industry. There was a sunrise industry in India, early 2000. And I started working for a startup, which was run by like two guys out of UK, and they wanted to outsource what you call investment banking work to India. And then I found that very, very interesting. I said, you know what, whatever it is, I'm going to start working for you guys. And I did start working for them. I worked for that, startup for like 2.5 years. I think so that gave me the basis of understanding what investment banking is about. So there were two guys, the what you call the founders of that company. One was an ex-McKinsey consultant, and the other one came from the corporate finance world of GE. So they both had like really good experiences, and then they kind of handheld the whole team and let them run after that. And then there was a third partner who came in, who was an ex-M&A banker from JP Morgan. So the three of them, they were like really smart people, and I think so. Those 2.5 years, I learned a lot about what are the basics of M&A of investment banking. Then I moved to Bangalore from Delhi, and I worked, and I wanted to do something different. I did some 1 year with a small section of Infosys that was dealing with the same outsourcing, and I was doing fixed income research for another big Wall Street bank. I did that for a year, and then I then moved to Bombay, where my life in JP Morgan started. And I was for 4 years in investment banking in Mumbai. And then I again moved to Brazil for a couple of years. And then I finally moved to London, where I'm based now. So it's been a journey, but um, I think so. The two things that I've learned in my past, like say 25 years of work is always keep an open mind, and keep learning whatever possible you can. And I think so at a point you'll come where you'll realize that there's a lot of learning that you have and different skill sets that's on the hardcore skills that you want. And then of course the other side is your softer aspects where you meet people, you network around, and the more you have lived in different parts of this world, the more you understand the culture. And if you can mix the two with the product knowledge as well as your knowledge of, let's say, networking, people, customs, I think so that's the best combo that you can have.
A lot of students want to get into investment banking, but don't really know everything about it. Could you describe what investment banking's like do?
Okay. So investment banking is an umbrella word, and you can have multiple products under investment banking. Mergers and acquisition is one, right? And the wording is self-explanatory. Then you have what you call the equity markets. Equity markets is IPOs. You want to list a company on the stock exchange, right? You want to trade, you want to buy a company which is already listed, so you have to buy their shares from the market, right? That's part of the equity markets. Then there is third is a debt market or bonds, right? So maybe companies they want to raise capital and they want to raise capital from the market. So that's another line of business within investment banking called debt capital markets. So you have M&A, you have equity capital markets, then you have debt capital markets. So these three form the basics of investment banking. If I look back at what basic skills you need, there are two skills that you need. One is, or let's say three. One is perseverance, important. Number two, you need to have a good analytic bent of mind. You can play around with numbers, understand numbers, because investment banking is all about numbers, right? And the third is over a period of time, you gain understanding of how to negotiate deals. But that comes later on. But first of all, the basics that you need to do is perseverance, hard work, and an analytic bent of mind. So people might say that yes, you need to be from a top institute. Not necessary, because at the end of the day, if you can crack the interview and show that you have an analytic bent of mind, that counts when it comes to investment banking. Of course, there is a lot of I'd say, it's a very glamorous role that people think of investment banking. There's a lot of money involved also. You get paid well, but the underlying theme that I said, perseverance, hard work, analytic bent of mind, that's the three basic things that you need to be a good investment banker.
I find it quite interesting how you talked about like the different roles within investment banking, because a lot of my peers as well as myself before I started like doing these interviews thought that investment banks were more like about like handling financial transactions and just like like handling the spread of money. So, I've like over the past few interviews, I've learned a bit more about like what investment banks do, what banks do, and like how and what like different financial services do within industry and how they like work to control money. So it's really interesting to get your new point of view. Yeah.
Right. So I'd also add something. So that's let's say the private side of investment banking. There's another public side of investment banking, which you see traders,
Yeah.
right? Trading is the public side where you are trading. You're trading in bonds, you're trading in equities. That also is part of investment banking. So somebody who's really good, loves trading, understands how stock markets move, how the bond markets move, the basics and all. That's also part of investment banking, if you like. Then there's a third part, which if you're really, really liking to write, to understand, to research, then you have equity research, and then you have the bond research also, where you write research notes on companies, public companies. Like say, for example, Microsoft or Tesla. If you look at the stock markets, lately you've seen a lot of movements in the stock prices of these companies. That's where, the equity analyst in investment banking, they write research reports. And every quarterly results come out. Then they question the the senior management of that company of what is the outlook looking about that company for the next 3 months, 6 months, year. And based on that, they write their research reports, their notes, they put in the model, and then they come up with, okay, this is our expected stock price that we're going to see about this company in the next 6 months or 1 year. And then they give a flag of its positive, neutral, or negative. So that's also another part of investment banking. So you see three parts. One is the private side, which is M&A, debt capital, IPOs, equity markets. There's a public side, which is trading, and then there's this equity research, bond research, which is also a private side because you have inside information and you can't talk to the M&A guys, the public side.
Interesting. So even within like an investment bank, you can't talk within your own companies since
Yes, you have these what you call Chinese walls, especially like if there's a what you call a MNPI, It's a private information, material, non-public information. So if there's a company, like say for example, I'm an investment banker, I'm an M&A banker, and I'm advising a company X,
Mhm.
right? And I'm talking internally to the C-suite, so to the CEO, CFO, in terms of how do you want to expand? How do you want to increase your revenues? Maybe I see that your company is not doing well in, say, Latin America, and you will veer the discussion with the CEO, CFO in terms of, and first of all, understanding what their needs are, and then, of course, based on their needs, you have to create some ideas to give them to make them feel that yes, this is a good thing that to do for the company because I see that this company is going to grow more than what we want to, and then have a competitive edge against its competitors in the market. So what you could do is like say, for example, you're not good in LATAM, I have some opportunities there. Are you okay to think about it? Then you give those opportunities to the C-suite, right? And then, of course, if they say that, okay, we're fine with this, then you initiate a dialogue. And when that dialogue goes to a level where, yes, they want to buy a company, that becomes a material, non-public information. That's information that you as a deal team will always keep within yourself. You will not let it out to other team members or other groups within the M&A world. So you end up going in a wall or in a let's say a cage, and then you do that deal there so that there's nobody else knows about it. But these are like things that are under regulation. You have to abide to these, and you might have heard about many news on the on the internet and the newspaper that you have banks fined because they leaked out some information. Some people made money based on some non-public information. That happens. That has happened quite often in the past, and the regulators have wrapped these banks on that. So you have to be very careful. And there's a whole load of regulation that you have to stick around with. But I won't get into details here.
You were talking about mergers and acquisitions, like investment banking there. I'm finding it quite interesting what you were talking about since, that sounds very similar to what consultants do. They advise their clients and they advise them on the next step. So I just like it sounded very similar to that.
It sounded similar, but there's a very different, uh, I would say, a stream. A consultant, I think so. If you're talking like, say, McKinsey, Boston Consulting Group, and the likes, they they don't advise on M&A. They don't have the expertise to do M&A. They can definitely advise from a qualitative perspective, market perspective. They do market research more, analyze companies, markets, and then they give out advice to such companies in terms of, okay, this is where you need to go. This is how you need to to invest in. Mostly, I feel consultants are brought in if the company feels that they need to fix something that's wrong. You see the difference between M&A and consultants.
Yeah, I think so.
And I've seen that happen in the banks also. Banks also involve consultants, and they also hire ex McKinsey, BCG consultants in banks, but they'll end up in the strategy section. How to strategize, which markets to attack to, what kind of markets to attack to. But M&A is only about mergers and acquisitions. And that's pure mergers and acquisitions, like the word says. If I want to acquire a company, I won't go to a consultant. I will go to an M&A banker.
Yeah.
If I'm the target, I will still look for an M&A banker so that he can be my advisor from a target perspective. But consultants are a different breed. They're like, okay, how do I reduce costs in this? How do I bring efficiency in my X unit that's based in, say, I have a factory in India and I want to make it more efficient. I feel like, I'm not getting the right profits out of it. Then you ask a consultant. You don't go for an M&A banker.
Maybe you could explain what you do as a transaction manager.
Okay. So the transaction management, that's a very generic word, I would say, but I am more focused on corporate lending.
Mm.
Okay. So it's similar to debt markets, but debt markets in investment banking are more on the public side, on the stock markets, issuing bonds and so on and so forth. What we do is corporate lending. So every corporate, they require loans, right? It's just like you need a credit card, okay? Or if you need to buy a house, you need to mortgage. You need to get a mortgage from a bank, right? So you will have to rely on a bank to provide you mortgage. So they'll say, okay, you pay like 10% down payment and the rest 90% the bank will support you. But every month you have to pay us a certain interest. And if you want to pay down the principal slow by slow over a period of say 15, 20, 30 years, that's how the mortgage runs. In corporate lending, it's the same. Instead of lending to individuals like you, your parents, whenever you want to buy a house, we do that to these big corporates. Okay, so corporate requires money, loans to run their internal business, working capital.
Yeah.
Okay, so when you sell something, you have to pay your your like suppliers for raw material, right?
Yeah.
And then when you sell, you expect some money coming in from your customers, right? But
Yeah.
the money that you have to pay to your suppliers for your raw material, if you pay it today, right? Your
Yeah.
raw materials come like say in 10 days. Then it takes time for that raw material for you to manufacture into the finished good. And then you will have to take it out and sell it to the market. That also takes time. When you sell it in the market, you also get you also have to take time for the customer to pay you back, right? So you see like the money that has gone out from your pocket and the money that is coming into your pocket, there's a time lag in it.
Yeah.
Okay, to fill that gap, that's what you call working capital loans. And that's where corporates they would like to have that money so that they can run their business efficiently inside. So corporates, and then sometimes you need for some other reasons, like general corporate purposes, you see that there is the corporate feels that for the next 1 year I might be running low on cash. Maybe I need more cash, so I'll go and look out for a corporate loan, and that's where banks come in.
Yeah.
Okay, that's also another line of business in the banks world. So I'm part of that. So you have corporate bankers, you have investment bankers. The investment bankers are all about what I told you earlier. And then you have corporate bankers who talk to the treasurers of companies. Treasurers are those that make sure that the money coming in, money coming out, and what all this working capital timeline is. How do I focus on that working capital timelines that time I explained to you earlier?
Yeah.
And how do I fund that? So a treasurer will think about, the next 1 year, 2 years, how my inflows and outflows going. And based on that, he will provide that information to his CFO and say, okay, I need money. Then the CFO will talk to a relationship manager in the corporate banking world in the bank and say, you know what, I need a loan. So we will go out there and pitch to them. And for that, you need loan agreements.
Yeah.
Okay. Like if you have to buy a house, you have to get a mortgage from a bank, then you have to sign certain documents, right? And that's the mortgage deed. And that mortgage deed is very similar to what you have a loan agreement. So the transaction management, there are very few banks that have these roles. We sit and we help these corporate bankers to execute this loan agreements for corporates.
So you handled these major transactions between big companies and banks?
Yes.
That's kind. That's a little bit of a different role from what I've heard. So it's like interesting to hear these different roles.
Yes,
Yeah.
and
And then,
that's what it is because I did investment banking for the first 5 years when I was in Mumbai. I learned all the stuff there, and then I've changed, and then I went in LATAM, and I was the business manager there for the trade finance world. So trade finance is another line of business, which I can explain, and it'll take another 5 odd minutes there, but I'm not sure if we have enough time here. But trade finance is also another product. So you'll have different products in the lending space. Okay. Lending could be, like I said, providing a bond,
yeah.
right, to a company or a corporate loan. Or you find that some companies they do trade, you know, they buy, they sell. And in that whole process, you need trade loans. Okay. That's also a type of a debt. There are many other types of debts. There's different products, and I can go on and on here. But in major terms, corporate loans, and corporate trade loans are two big, let's say, um, parts of this whole corporate lending world. And
Yeah.
then, of course, you have other small parts like credit cards. That is also a loan, basically.
What are some steps that helped you get to this point in your career?
Wow. Okay. See, I've been really blessed that way to like learn different products within banking environment. One important thing that I saw over my past 20 years of career is keep your mind open to explore opportunities, right? It's always like that every 2, 3, 4 years when you do one stuff, you learn that. And then either you just want to continue doing that, or if you have that urge in you to learn something new, be open in learning in that. The first important thing, as I tell, if you want to get into M&A, are those three things: perseverance, hard work, and an analytic bent of mind. But once you get into there, then of course you will start learning all the products, what the bank does, and you can get an idea of where you want to fit in and where you want to do and learn new things. But always, as I said, I've always kept an open mind, and I've always made sure to keep your networks in the bank, to know the right people, to have mentors at the senior level, because they have seen that world, and the more you talk to those mentors on a regular basis, they know you in and out, and they can guide you on what you want to do, what you want to do. If you want to do this, how do you get to this point? So two things: have good mentors and have an open mind to learn new things.
Okay. Great. So maybe how about so what are some things you're looking for? So let's say you're hiring a fresh college graduate. What are some soft skills or in general skills you're looking for in those college graduates, or maybe specific college majors or colleges you look for within these fresh college graduates?
See, I'll be frank with you. If you want to get into M&A, the cream of investment banking in a top tier bank, I think so. The first thing that the bank will look is definitely your college, where you're graduating from. It is a reality, right? But you have exceptions. So don't feel sad that if you're not going to like a Harvard, Princeton, or any of these Ivy League, that you won't be able to become an investment banker. I've seen people who have graduated from normal universities. I mean, I know one or two people who are at a very, very high level in one of the top investment banks. They've just done a basic chartered accountancy. But it's again, uh, if you have to get into that role, of course, the college is important. if you have no experience, of course, we will, banks, they generally go to these colleges, they pitch for them, and then they interview theirs. But if you have come out of college, um, what I will look for, again, as I said, is an analytic bent of mind, because M&A is all about numbers, numbers, numbers.
Yeah.
How well you can interpret numbers. Do you have a flair for numbers? Do you like reading into financial numbers of a company? Would you want to do that? Would you want to learn also?
Yeah.
So that's one important thing. Of course, then how well you communicate your ideas. Do you have focused thoughts? Um, and a good. It's basically you'll get a feel, a gut feel from a personality of a person that yes, this guy could be a good fit in the investment banking world. But again, basics. If you're fresh out of college, if I haven't met that person and I'm just seeing the resume, unfortunately, the main thing is which college have you gone to and what degree have you obtained from that college. Having said that, I've seen graduates from Oxford and other Ivy League schools. They have done a BA in English literature. They've done an undergrad in history, but they still end up becoming investment bankers. Again, as I told you, it's like the analytic bent of mind. So there might be some questions in the interview process which will be very analytic. And if you can crack that, irrespective of whether you are, economics graduate, whether you are a mathematics PhD or English or other language graduate, it doesn't matter then.
Right. So
Yeah.
we're running out of time, but do you have any final tips for students and or anything final to say for students? And also like maybe could you describe some fields students should be looking for within the future?
Ooh. You know, I think so. Lately, there's this thing about artificial intelligence that's the buzz in the whole world, and I think so that buzz is real,
Yeah.
right? That buzz is real, real. So if you look at I'm looking from an investment bank perspective. When you join at the lowest level, at the junior analyst level, you're going to do grunt work, and the grunt work is working in Excel, PowerPoint, Excel, PowerPoint. Of course, have really good skills in Excel, PowerPoint, and Word. That's the prerequisite, number one. And number two is like playing around in Excel. How fast can you build Excel spreadsheets?
Yeah.
How fast can you interpret numbers,
Yeah.
right? But with this I feel that role is going to be automated very soon. And it has been automating, okay? But
Yeah.
you will still feel that there's a human need for interpreting and inputting the information. So
Yeah.
AI won't be like 100% all robotics, guys, but that'll become a very significant part in probably everyday life.
Yeah.
That one thing, and I was watching Bloomberg News yesterday, and there was this very famous professor called Nouriel Robini. Might have heard of him. He gave like 7 or 8 uh, things that are going to shape the world in the coming years. AI was one of them. Green tech, semiconductors. Um, he said space exploration, quantum science, and maybe one or two. So these are the things that if you can focus on these as a career moving forward, I think so you're in good space because these will define the next 50 years of this world. Artificial intelligence, technology, fintech, financial technology, green technology, biotech, semiconductors, space exploration, and then quantum, of course. So these will define define the next, probably not 50, even maybe the century. Like you see about like Tesla saying, Elon Musk, you want to build something on Mars. That could be a reality with now artificial intelligence, quantum physics, semiconductors. You put all that together, and you know, fantasy becomes reality soon.
Great.
So for all the people who are thinking we're just graduating, I think so. Focus on these industries, and if you can do something, research, talk to people, go on LinkedIn, see what people are saying, um, read some reports, join some events. Um, that I think so will be really good. But investment banking, of course, the basics of money, people requiring money to do something, the basic thought will remain there. But the underlying basics of the fundamentals probably might be taken over by technology.
Yeah.
So how you change your mind, adapt to that technology, if you can do that faster, you'll be a success in world.
That's also quite interesting. I'll just
Mm.
go quickly with this. So in the last interview, I had talked to an investment banker and he said AI won't change the field, only slightly will affect the field, but mostly won't change the field of investment banking. And you're telling me a little bit of a different thing, which I find quite interesting. You know, there's some controversy within AI. Um, anyway, we don't have any more time left. Thank you so much for coming and thank you so much for participating in my interview series.